it is very important to understand the power of selecting the right country, but also the right stock, because you only compound your return if you have the tailwind of a more stable political environment and an improving macro environment, and at the same time you're picking the right sectors and right companies. You can have a very good risk-adjusted return in this space, which we consider, again, early phase capital markets with a lot of pricing inefficiencies. And I think one of the best examples, it's not even a frontier country. I can give you several examples on frontiers, but one tiny country for MSCI used to be our largest exposure about 2 years ago, and that is Philippines. And for MSCI, and by the way, we are index agnostic. Our portfolio invests in both emerging but also frontier countries, but also non-index countries, and we have very little overlap with indices. And Philippines at that time, and this is end of 2009, was a forgotten land. Nobody cared about Philippines. People didn't really search for ideas, didn't even travel there. I was one of the few foreigners visiting the country because everybody was on board on China, India, BRICS, large countries. And in 2009, we were running our screens and we were finding lots of value opportunities in the Philippines. And one name came up on the screen. It wasn't a large cap idea, but it wasn't too small either. It was a mid cap type of idea. It's Alliance Global International, AGI, ticker symbol in the Philippines. And that company came up on our screens based on the criteria that I just mentioned: high growth, single-digit PEs, low EV to EBITDA, high return on improving return, and net cash on balance sheet. And we didn't really know the company, so we said, okay, let's include that company in our trip. So we included the company in our trip. We did obviously a lot of due diligence, and reading before the trip, just based on public information. On the annual reports and filings. And the good thing is Philippines, since it's a pretty, I would say it has a long history with the US and the Western world. They have good information and good transparency in terms of disclosures, in terms of their kind of annual reports and SEC type of disclosures. They're pretty good. And we found out that this is a conglomerate. And they are in the sweet spot of Philippines growth. They're in the consumer space. They do have 3 type of consumer businesses. McDonald's franchise in Philippines, which is a turnaround story, because the Filipino equivalent of McDonald's was doing much better than McDonald's. So McDonald's was a laggard in the country. The second franchise that they have is a liquor business. They have spirits, and they're actually the largest and most dominant. It's a cash cow for the company. They do have Emperador brand, which is the largest and most well-known brand in the country. And then the third one was real estate business, but more of a middle income real estate business that. Attached to it, there's also a business process outsourcing type of rental business. So they have a recurring income, again, very very much cash, good cash cow, but also on the development phase, they don't need funding because they're funding through sales and building it. So it's a good cash flow model as well on their mega world, which is the real estate business. So we said, okay, these businesses look interesting. So let's go and talk to the company. We visited the company, the headquarters. We talked to the management, and we realized that nobody was talking about another business that they're entering in, which is the first private casino of Philippines. And most interestingly, they were teaming up with a company from Malaysia, which is well known actually in Asia because they have casino operations. This is Genting, Hong Kong, Genting, Malaysia, same group, and they were entering Philippines as the government just some time back privatized and gave 4 licenses to operate casinos, private casinos. and they were the first one to invest in. And they were about to do a soft opening, and nobody even, again, the coverage was low on the stock from the sell side. No one knew about this new business, which is also a cash cow. And Ganting was helping with the know-how, but also was helping them with basically bringing tourists from Korea, from Japan, from China. And by the way, Philippines, through the privatization and the casino business, gave a lot of incentives so that there is an inflow of tourists to the country. Incentives in terms of you pay less taxes, less fees on your gaming. Not only incentives in terms of corporate taxes, but incentives in terms of players from other countries. And it's in terms of destination. I mean, this is a short distance of a flight from Hong Kong, from Korea, from all these places. So it's a strategically located destination. It's an early business. And when we did our analysis, we did 360. We analyzed Macau, early on, basically Macau market. How much of a size Philippines is in the long run. So we've done a ton of work, but even without factoring in the casino business, the upside was quite substantial. So after meeting with the management, after also meeting with the key players within those segments, we decided that this is a very good risk reward and invested in the company. And in the meantime, the political environment was getting better, because 2010 there was an election in Philippines. And after 8+ years of pretty much status quo under the previous president and no investments in the country, private or public, Philippines was basically underperforming pretty much all their peers around Asia in terms of growth. While Asia was growing 5-6%, Philippines was growing 3-4%, just because nobody wanted to invest. And even the hotels were decaying, the 5-star hotels, everything was underinvested in the country. So we saw that as an opportunity, because 2010, in May, June, there's a presidential election, and the two running candidates were both business-friendly, reform-oriented, and relatively cleaner. So as a result of that, we expected some sort of interest also, for Philippines market, and also maybe growth picking up over the next 3 years as a result of more government incentives to attract investments to Philippines. And after the election, I think our base case scenario happened to be the right scenario. And in the meantime, Alliance Global was saying that they would generate 40% of their earnings from casino business within the next 2 years, and they did that within a year. And they had the first mover advantage. They had a clean balance sheet. They had been implementing with the know-how of Ganting, so that it wasn't a lot of execution risks as well. And relatively speaking, there was not much competition on the casino side. And only other businesses, Mega World, the real estate cycle was helped by obviously low interest rates environment and remittances, which is the largest component of funding for Philippines. Remittances of overseas Filipinos remained strong. Roughly 10% or more of the GDP every year comes. So there's also stable currency, because money coming in terms of dollars and hard currencies into Philippines, sent by Filipinos, and this money is spent for consumption. And AGI set on top of that trend, and the stock tripled over a year. So this is just one example of mispricing and under coverage, and also finding opportunities while you're traveling.